All right, well, let's go ahead and get started here. Welcome back, everybody. I hope you had a good Thanksgiving break. A couple of announcements here. Now, we've been working on a variety of different methods for cost estimation, and all of those wrap up into just a single homework assignment, and that's the last assignment of the semester. Homework 14 is due before class on Wednesday. And then the only other thing for us to discuss is the final exam, which for this day and class time, we're scheduled to have our final exam on Tuesday, December 7th, so that's a week from tomorrow, from 10:15 to 12:15. I'll give you some information about that final exam on the next slide. Today we're going to finish talking about cost estimation. And then on Wednesday, we'll discuss something that's known as depreciation. And finally, on Friday is taxes. And so I'm glad to see a few more people here than usual. I would encourage you to come to class on Wednesday and Friday as well, because that material will be included on the final exam. So a few things about the final. I'm returning your equation sheet from midterm 2. Remember that on midterm 1, you just had the formula sheet that I provide. So this is your personally prepared formula sheet, and on midterm 2, you could only write on one side of it. So for the final exam, you can use both sides. And so you can continue adding additional notes to the other side of your paper if you choose. Excuse me. The exam is going to go lectures 1 through 42. So it's a comprehensive exam. But there's going to be more of the points coming from the more recent material since the second exam. And so that's lecture 30 through 41 will get a disproportionate number of the points. So you may get a really simple, find P given A type question, but relatively fewer of those points and questions will be on the exam compared to things covering cost estimation, taxes, depreciation, meaning the more recent material. Yes?
How much would you say, like 75%, 50% on the newest stuff?
I don't have any other information than what I've just given you. I haven't written the test yet, and I don't want to box myself in with a specific percentage. The exam's going to have both problem solving and short answer questions, and then finally, you should bring your laptop to the test because it will have some questions that you have to solve using Excel. And I'll clearly indicate on each of the problems that are problem solving if you should use Excel or if you shouldn't use Excel, because there are some that I want you to do by hand and others that it would be ludicrous to do in any other way except for Excel. So are there any other questions about the final exam? Yes?
So all formulas that we want to have need to be on our sheet, won't be provided?
I'm going to provide the same formula sheet that I gave you for the 2 exams you've had so far.
Okay.
So it's going to have all the P, A, F, the gradient formulas, and then any kind of factor table that I'd expect you to use, I'll also provide.
Okay, thank you.
Other questions? Okay. What we're going to do right here is pause for a moment about money. Okay. Any questions on announcements or anything else before we move forward? Okay. In the past, people used interesting things for money. They used beads. This is called a sand dollar. Gradually, people evolved to using gold, and more recently, paper cash. And then, of course, I'm sure everybody's familiar with the idea of cryptocurrency, like Bitcoin, for example. And so the question is, what are the characteristics of money? Like, why is it that people stopped using sand dollars and started using gold? What do you think? What would be the motivation for switching from shells to gold?
Harder to get?
Okay, so scarcity is a component of it. And then why is it that instead of using gold bars, boy, wouldn't it be sweet to have a kilogram of gold, 1,000 grams of gold? Let's see, a kilogram is 2.2 pounds. A pound is 16 ounces. An ounce of gold is about $1,200, I think. So yeah, one of these bars is worth probably like around $50,000, I think. It's a lot. So But why do people use paper money instead of gold bars?
More convenient.
How is it more convenient than carrying a brick of gold?
Well, you can hide it from people and it's not
Okay.
heavy.
So it's less heavy. Are there other ways that cash is more convenient than gold?
It's in smaller amounts.
Smaller amounts? What do you mean?
If you want to buy something for $100, you don't have to give them a brick of gold and get
Okay.
back $49,000.
Right, exactly. So if a brick of gold is $50,000 and you just want to buy a tank of gas or a cup of coffee, I mean, you'd have to like shave off, just like with your pocket knife, you'd whittle your gold, and then it would be tricky to weigh it, you know, because everyone would have to have a finely calibrated scale. Let's go back to the gold standard so we can whittle gold. No, that's not what people mean by the gold standard. In the old days, cash used to have a certain amount of gold that was sitting in a vault representing that cash. But I think it was back in the 1970s, the government decided, no, we're not going to keep the same amount of gold as is represented by the amount of cash that's circulating. We don't need to do that anymore. And instead of being backed by physical gold in a vault somewhere, now currency is backed by the taxation authority of the United States government, which maybe is more powerful than a vault full of gold. When you've got the most powerful and productive economy in the world, and then the government has the legal right to tax it. Now, why is it, though, that people are interested in Bitcoin instead of other forms of money, like checks and cash? What are the advantages of cryptocurrency? Yeah?
It's a finite amount.
Okay, there's a finite amount. That's right. Like, I think there's only ever going to be, what is it, around 30 million Bitcoin, approximately? But the federal government can print an unlimited amount of currency. And even if they're not physically printing it, there are computers at the Federal Reserve where they push a button and now magically the money exists and it can be loaned out to banks, and then the banks can loan it to people. And so Bitcoin only has a certain finite supply, whereas in theory, fiat currency could just, an unlimited supply could exist. Are there other advantages of cryptocurrency besides the scarcity?
People hope that one day it would be just one global currency.
Okay. Yeah, great. So just the fact that when you go to different countries, there's different currencies. I've traveled a lot outside the United States, and one of the things that's really great about being an American is that your dollars are good just about anywhere. If you go to any country in the world, they're pretty much happy to take a US dollar. And if you want to change it into their local currency, it's usually a pretty cheap transaction. Like the spread between buy and sell is small, which basically means you're not losing much in the transaction. Whereas when I was living in Dubai, if I took Dubai's money, which is dirhams, if I took Dubai's money to Iceland, they didn't want dirhams. They'll take dollars in Iceland, and it's easy to exchange dollars for krona, but it's more tricky to exchange dirhams for krona, just because those are two relatively smaller economies with two relatively obscure currencies. And so there's some friction there, the idea of different international currencies, and having a cryptocurrency would eliminate that friction. And so related to that is it's much easier to buy and sell things using cryptocurrency in theory. You know, like if there was someone that you wanted to remit money to in Guatemala, you could just type in their address or take a picture of their QR code and send them the money with no intermediaries. You don't have to go to Walmart and use Western Union. You don't have to go send a MoneyGram from some shady paycheck loan place. It would just make direct transfers more easy. And of course, that's what makes the government a little bit worried, is the fact that person to person, money can be exchanged without them having any control over it. And so there's concerns about money laundering and support for illegal activities like terrorism and drugs. So that's, Bitcoin kind of had a bad reputation at first. First time I heard about Bitcoin, I think, was probably in around 2010. And I was reading a newspaper article about the Silk Road, which was an illegal drug marketplace. And back then, Bitcoin was mostly used to facilitate drug transactions on the Silk Road. Obviously, I was extremely interested when I read all about that, and I started mining Bitcoin although I never went all in. I mined a little bit of Bitcoin back in those days, and it was just kind of fun to participate in like this new mindset of what money could be. I wish that I'd invested a ton of money into it, because I'd be a very rich person now, but it was just kind of a passing fancy. Now, there are some definitions and characteristics of what makes good money. And so let's think about, with all of these examples, how good is each one of these relative to these definitions and characteristics of money. So the first thing is that it should be durable. It should be able to withstand physical wear and tear. And so the sand dollar isn't durable. It could break. If you're stacking them up in your canoe because you've just exchanged a bunch of coconuts or whatever, those sand dollars could get crushed and broken. And the same thing is true of cash. There are a lot of countries where they use coins more than we do in the U.S. There are coins that have a value of more than $5 in Europe and in Great Britain. So the reason why they're so big on coins is that coins wear less quickly than paper currency does. And different countries, their paper currency wears out faster. In the U.S. they have high cotton content in the currency, so it's a little bit more durable. When I was in Nepal, the currency there is just it's like wafer thin. They use cheap paper for it, and so you have people arguing with you whether they want to take it because it's already so worn out and you can hardly see the printing anymore. So think about durability. And so Bitcoin is pretty durable. It doesn't age at all unless you lose your private key, and then you're really in trouble if you forget your password to the Bitcoin, and there's lots of money that's been lost that way. Portability. And so if you wanted to move your wealth from place to place and it was seashells, that would be less portable than gold, because gold has more value than the seashells. But even though a kilogram of gold is $50,000, that still would add up. If someone wanted to move their entire life savings because they're retiring somewhere new, it would be really inconvenient for them to have to do that if it was physical gold or even paper money. But wire transfers, checks, and cryptocurrency seems to do a little bit better on the portability aspect of money. Divisibility. We've talked about this already, the idea of trying to scrape a few flakes off of a gold bar to pay for a small thing. To be useful, money has to be easily divided. And the next characteristic is uniformity, which means that this almost is kind of hard to understand what it means by uniformity. But there used to be coins in the past where people would try and shave a little bit of silver off of the outside edge of the coin. And that's why there's a lot of ridges on coins nowadays. Those ridges would help you to see if the coin had been shaved. And so back in those days when the coins, before the ridges, you'd have maybe a silver coin that had at its face the same value, but it wasn't actually the same value because one had been shaved down and the other maybe was just newly minted. And so trying to preserve the uniformity of money is an important thing, and that's one of the kind of upcoming issues of Bitcoin, is that they can now track when Bitcoin has been obtained through like a ransomware attack. And so then now certain Bitcoin addresses are blacklisted and tracked. It's not as anonymous and untraceable Bitcoin as other currencies like Zcash and Monero, which actually can be truly anonymous and untraceable. So certain money that's been associated with illegal activities can be less valuable than pristine, recently created Bitcoin. Limited supply. We've talked about how the government could print more and more cash and how that devalues the money. And so, there has to be a scarcity there for it to be useful as a currency. And then finally, acceptability. Everyone has to want to take the currency for it to be useful. And this is maybe one of the things that cryptocurrencies struggle the most with, is just there's so few people who are willing to take it as payment, either for services or for goods. And so Not listed here is the transaction cost of using the currency. Like if you're changing from one currency into the other, you have to take into account how much of a fee the intermediary is going to take for that. Or in the case of cryptocurrencies, you have to pay the network sometimes for a transaction to go through. And I think, I haven't checked recently, but last time I did, the transaction costs for a Bitcoin transaction was about $20, which meant to move money from one address to another, you had to pay a fee that was equivalent to about $20 worth of Bitcoin. And there are a lot of new techniques being used to try and bring those costs down, like the Lightning Network and other currencies that have bigger block sizes and faster transaction times, because what really people want is the ability to have microtransactions with cryptocurrency, where you could pay someone a fraction of a penny, where the network fees are so low that you could, if you're reading an article or someone made a funny comment online and you wanted to pay them a tenth of a penny, once they're able to do microtransactions, then people have speculated that that would also be really useful in the developing world, where people don't have much money to begin with, and so even a 25-cent transaction fee would be too high for a cryptocurrency to be very useful in a developing economy. So these characteristics of money, maybe we should have talked about this at the beginning of the semester. What is money? It's a store of value. You know, we use money to try and consolidate our earnings. And if you think about what old people are doing, they're using money to provide for themselves in their old age when they can't do things anymore, like split wood and get food, or build their own shelter, or heat their home. You know, all the things that you need to have a little bit of physical strength and vitality to do that you take for granted that you can do when you're young. The store of value aspect of money is really important. And so that's why I think it's great for you to start thinking about your retirement now, so that you can just stack up the cash and have a good retirement. By the way, speaking of your reports, I've been going through the reports. I'm about halfway through grading the class, and I'll continue grading those through this week, and you'll definitely know your score by the end of the week, so that you have a clear picture of where you stand in the course going into the final exam. Okay, now we've briefly touched on this before, contrasting different categories of costs, but let's revisit it again. This slide illustrates the characteristics of direct costs and indirect costs. And the direct costs are those that, as the name implies, go directly into producing goods or services. And so when you're trying to make a certain thing, the money that you spend on the labor, the materials, the supplies that are consumed to produce that thing can all be considered as direct costs. And the way that you know they're direct costs is that you wouldn't be able to do the thing, even for a short period of time, without expending money in those categories. Whereas, in contrast to that, the indirect cost, it's hard to know precisely how much of each one of these are tied into making the thing. And oftentimes you would still have to pay the indirect costs even if you weren't doing your production. And so there is somewhat of a relationship between direct and indirect, as well as fixed and variable costs. You may remember that those are other categories that we talked about, where the fixed costs are the things that you have to pay each month even if your level of production is low, and the variable costs are those that are directly allocated to what's being produced. And so variable costs are almost always direct, and sometimes the fixed costs fall into the indirect category. So things like rent, utilities, general office expenses. Now, obviously, the more of something you make, the higher your utility expenses are going to be in many cases. Like if you have manufacturing equipment and you're consuming electricity, then there is going to be a relationship between your level of production and your utility consumption. But not if it's things just like keeping the warehouse warm or having lights on overhead. whether people are working one shift or working two shifts, if the facility is going to be lit around the clock, then the utility costs in that aspect would be considered indirect because it's not tied to a certain level of activity. So in cost estimation, which is the section of the course we're in right now, we're trying to figure out how to project in the future how expensive things are going to be. And one aspect of cost estimation is trying to figure out how do we account for and recover indirect costs, because you can't easily just add it into the price of the thing on a per unit basis. Whereas like in the case of plastic, you know how much plastic goes into manufacturing a phone case, and you know how much labor is required to manufacture the phone case. These indirect costs are a little bit more tricky. And so one of the techniques that we use is dividing the cost categories into different allocation basis. And if you look at, this is a table from your book, it suggests different ways of recovering different cost categories that are typically considered indirect cost. So take, for instance, taxes. If you're paying property taxes, you don't know how much property tax it takes to make a phone case. If you're in the business of manufacturing, there isn't a direct relationship there. And so what they're suggesting is that you try and create an intermediate link between what the taxes are being paid for and how the space is being used. So in the case of property tax, if you have a certain amount of square footage in a warehouse and you're doing different things in that warehouse, what they're suggesting is that the things that are using more space in the warehouse, that's how you would allocate more proportionally of the property taxes to be covered. And then some activity that uses relatively little floor space wouldn't have to pay as much property tax because property tax is in part on a per square footage basis. And so each one of these is just kind of a similar rationale. Like if you have a building full of people who are using software, then maybe what you could do is you could recover the cost of having that software available just based on how many people are accessing the software from different parts of the organization. So here at Marshall, for example, they have the Adobe Creative Suite. And we here in engineering don't necessarily use Illustrator and Photoshop and what's the video editor called? Premiere. We don't use the Creative Suite as much as they do in the College of Arts and Media. And so what this is suggesting is that maybe what you could do, instead of just having everyone pay an equal share of having Adobe Creative Suite, you could actually just track who's using the software and then allocate the cost based on who's using it. And so that's why you pay a fee for lab equipment in our college. There's an extra fee. You have to pay more to be a student in our college than you do just the general university tuition. And the idea there is that the extra money that you pay goes to cover things like concrete crushing machines and welding materials and a room full of servers that you can utilize. So just the unique costs that we have in our college are covered by that extra fee that goes for being a student in our college. So the book has a variety of different ideas on how to recover those indirect costs. And so to just practice this a little bit, in today's in-class exercise, we're going to start off by considering a holding company. It's a construction company that has 3 different subdivisions. This construction company does excavation, steel assembly. So steel assembly means like they build the wire cages that then concrete gets poured in and around. And then a surveying division that goes out and does land surveying. And these are 3 very different businesses, all held by the same construction company. And the construction company needs to recover $6.95 million in indirect cost. So those indirect costs are things like the executive team salary, the insurance that covers liability for the construction company, maybe the utilities of the headquarters, just the costs that can't easily be directly tied to the operations of these three divisions. And so what we know about each of the divisions is how much revenue they each generated in the previous year, the number of employees they have, number of active projects. We just have some data about them. And we're going to try and explore, play around with different ways to figure out how we're going to collect that $6.95 million. How much of that 6.95 has to be covered by each of the three subdivisions? Like the least fair way would be just to divide it by 3. Just to say all 3 of these companies, the subdivisions, have to pay 1/3 of the indirect cost. I mean, that wouldn't be fair because they're different sizes. It looks like the excavation company is the biggest in terms of revenue, and then the steel assembly affiliate is the biggest in terms of employees. So it wouldn't be fair to the surveying division if they had to pay 1/3 of the indirect costs when they're such a small part of the overall business. Okay, so A through D, I'm just suggesting some different ways that we could use to recover this $6.95 million in indirect costs. Of course, feel free to interact and collaborate and check answers with the classmates that are here in the classroom with you. Let me show you, give you an idea of where things are headed here. Let me show you the solution to part A, just to help clarify what this method says. And so you find the total revenue of all of the subdivisions, $17.5 million. And so the indirect cost has to be recovered proportional to the base revenue. So what that means, for example, with the excavation company is since they have let's see, $13.5 million out of 17.5. So here is the proportion of their revenue to the total revenue. Then you multiply that by the indirect that has to be recovered overall company-wide. And so that means that of the $6.95 million that has to be recovered through the whole company, $5.3 million of it is going to be recovered by the excavation company. So then you do the same thing with the steel assembly affiliate and the surveying division. You would find their revenue amount divided by the total, and then you'd multiply that by the indirect cost that has to be recovered. Here in part C, it is for the steel assembly affiliate, and so if you look at what data we have for the steel assembly affiliate is how much reinforcing steel they've assembled in terms of linear meters. So if they've done 57,000 linear meters of steel and they have to collect $1 million, what we're doing is we're dividing the amount of money that they have to collect by the measure of their productivity, which is how many linear meters of steel they've assembled. So you can see what they're going to do is they're going to charge their customers an extra $17.57 for every meter of steel that gets assembled, just to cover the indirect cost. And so a similar thing for Part D. If in Part D we don't have anything other than their base revenue for the surveying division. And so it's just going to be a percentage, and the way that we figure out what percentage we're going to have to charge is, remember from the formula that we talked about in class last time, if we know that their base revenue is $1.4 million, and then they're also collecting another $554,000, then that is 1 plus F, where F is the indirect cost factor, multiplied by the base revenue. There's other ways to solve for F, but what it ends up being is that they're going to have a 39.6% surcharge in order to generate that extra money that they have to turn into the corporate headquarters to cover the indirect costs. So part A is just determining the amounts. B, C, and D is all about allocation. Okay, we're going to have to just briefly look at this other one. We've got 3 minutes left, and so let me give you the main idea. In activity-based costing, similar to what we've just done, what we're trying to do is to figure out who is going to share what portion of an expense. And so if the IT department wants you to give them $145,000, and you have 3 different departments in your college, then there's a variety of different ways you could figure out who has to pay how much of the $145,000. The least fair way would just be to divide it by 3. But we have other data. We have an idea, for example, of the number of support calls per week. If you look at the support calls, looks like the computer science department has relatively fewer support calls each week than the safety technology department. And so if we were going to figure out how much each of these groups has to pay on the basis of support calls, we'd add up the total, which is 13, and then the proportional amount of support calls that each department has is multiplied by the amount that has to be collected, 145,000. So if we're going to do it on the basis of support calls, then that would mean the safety department has to pay more than the computer science department. But support calls aren't the only thing that's generating cost for an IT. It could also be related to the number of computers that each organization uses. And so if the computer science department has 45 computers, but the safety department only has 20, then maybe you should recover this $145,000 influenced by the number of computers that there are. And so we do it that way. We add up the total number of computers is 100. And so then the proportional amount of the budget that has to be borne by each of the 3 departments is just allocated on the basis of the number of computers. Or if we did on the number of students, you can probably guess what the trend is going to be. You add up the total number of students, and then you multiply the fraction of students in each department by the budget overall that has to be recovered, and then you get a certain amount. And so then in the end, how much, what formula should you use? Maybe it would be a blend of these 3 different methods. You'd try as closely as possible to identify what are the actual things that are generating costs. Okay, so I'll leave this up for a moment. That's basically all the time we have for today. Remember that your homework assignment is due on Wednesday before class, and we're going to be talking about depreciation on Wednesday and taxes on Friday. If you didn't pick up your midterm exam in the past, I have your exams here if you want to come and pick it up now.